Punita Kumar Sinha, Managing Partner with Pacific Paradigm Advisor, joins us. Now, Punita, good morning. Thank you for joining us. Let's start with your market view. How do you think global markets and Indian markets are positioned?
Well, I think what is in focus right now is the big, beautiful bill that's just been passed by the House in the US. And I think that's going to have an impact on both US markets, US economy. It'll have implications for currencies, um, US bonds, and indirectly that'll impact some of the other global markets. So I think that's quite the most recent kind of development that could have long-ranging impact um, because the fiscal deficit in the US is going to rise in the short term. That would obviously have an impact on both the dollar and the US bond yields potentially. Um, so I think, and it'll also have some impact on, spending patterns over time, the healthcare sector. So I think that's kind of the focus, plus the data that's come out of the US right now isn't showing that there needs to be further rate cuts. At least the economy seems fairly better than expected in terms of employment. So that's another area that investors are going to focus on is, will there be more rate cuts, or is President Trump going to try and push out Powell and get a new governor for the central bank in the US, for the Fed, and therefore there could be some change in stance. So I think those are sort of the important events that at least US markets and some global markets will focus on. India seems relatively insulated from these developments, and we seem to be beating to a different tune. Dancing to a different tune rather. So we are focused very much on what is happening within India, where things seem to be generally fairly good. The monsoons have been good. And I think credit offtake is picking up a little bit. Inflation is mild. And the market is beginning to recognize some of these facts.
So, Punita, what should one do in this kind of a market when you flagged off there are multiple concerns around us?
There are some concerns, obviously. Valuations are a concern. While FIIs have started putting money back into India, I think the money that is flowing into other markets is actually far higher than what is coming to India. And if you look at the performance of the markets globally, year to date, while it seems like India is doing well now and things have turned around in the last couple of months, if you look at year to date, European markets have done a lot better. A lot of other EM markets have done a lot better than India. So India has really not been an outperformer this year. Even the last few months seem to have seen some strength, but relatively to other markets, we aren't the best performer. And that goes back to the one single concern that has always weighed on India, which is valuations.
Okay. So, at what level this global strength, to your mind, will get challenged? Could it start with reversal of dollar? Could it start with GDP data? Because while we may argue about the state of the economy, the fact that US markets are at an all-time high, the harbingers like Nvidia, they've made a new high, that is a clear indication of where the appetite right now is moving.
See, the thing is that US and India have been the best performing markets globally over the last decade. And given the demographics and the growth cycle that we are in India, I don't think that is going to get derailed by much of the global concerns or any global events to a very large extent. So I think longer term, medium term, India obviously is well positioned to capitalize on all the trends that are in favor of our economy here. So short term, yes, there could be some concerns that emanate time to time, and that causes some corrections. But I think longer term, the investors will have to keep focusing on India. Now, we have to obviously worry about the fact that the geopolitical situation is still quite uncertain, and what that means for commodities, what that means for currencies. And right now, the markets seem to be ignoring every risk out there. And so, one should start also be thinking of the risk reward trade off. And given where valuations are, given that there are risks out there that the markets have ignored in the last 1 month or 2 months, that there could be some rationalization um, and some repositioning of portfolios as a result of that.
All right, Punita, but coming to the India growth story, select pockets that you were betting on was NBFCs and India's consumption story as well. But given the run-up in NBFCs specifically, Punita, are the valuations still reasonable?
But I think if you look at the last several years, the NBFC sector, the financial sector has been quite a bit of laggard. Um, and so, to that extent, I think given good monsoons, I think the credit cycle is going to keep on improving from here. At least that's what the current data is showing, and therefore, I think there could be more upside in the financial sector. Um, you obviously there is a large there's a large universe of stocks to choose from. So you'll have to be, obviously, investors will have to become more focused on individual companies and their own, growth trajectory versus just a sector trend. The last couple of months has been the whole sector has done really well for the most part, except the private sector banks. But even some of the private sector banks have done well, but some others have not. But I think going forward, this sector still does offer value, and one will probably have to be more selective.
Okay, be more selective. That's the word coming in from Punita. But Punita, soon we're going to have the earnings season as well. Tell me, in this Q1, where is it that you're anticipating the positive surprises or the big disappointments?
Well, I think the earnings is another area of a bit of a concern in the shorter term, because if you look at the earnings estimate, there have been quite a few downgrades. Also, if you look at earnings growth, absolute numbers, the numbers that Indian investors are used to Indian companies delivering between 15 to 20% growth over the last decade. But right, so that is actually considerably lower than in the past. And given where valuations are, given the fact that we are trading at multiples again that are slightly above the 10-year averages, I think one would have to be more selective. And growth is definitely for FY26. The numbers are not, as I said, are not as they've been in the past. So investors will have to start looking out to FY27, 28. I think that's sort of what the data show.
Okay, Punita, what's your view on IT, given that that is one sector which has been hit largely because of the AI impact?
I actually couldn't hear you. I think my signal wasn't that strong. Could you repeat, Nikunj?
What's your view on IT, given that that is one sector which is completely getting marred because of the AI impact? Something's wrong with the line there, seriously. Q1 impact, some stocks which are there on your screen. I'm just going to refer to some names here again. There is a update in Bajaj Finance, there is update in Bandhan, there is update in HDFC Bank. Some of the defense stocks which are trending up, 1% move here. BDL, that's Bharat Dynamics. BEL, that's Bharat Electronics Limited. G Shipping and Cochin Shipyard. But Trent is the one which is on the receiving end right now. Marico is up 3% because of good quarterly update. And Angel One is also down by about 5% because of the decline in gross collection. Bandhan Bank down 2% because of CASA and some other stocks which are under pressure, largely from the capital market group. Bombay Stock Exchange, that's good old BSC. And there is CDSL, Angel One, and MOSL. So, Punita, now that you're back on line, what's your view on IT?
Well, IT is actually a complicated story because of AI, as you know, and there's to what extent is AI going to disrupt what our IT services sector is doing is still open to debate, and it's open. It's the verdict is out. I mean, in the sense that there is definitely going to be some change in the nature of the work that the Indian companies are doing, and whichever companies are able to keep up with the new trends would obviously be winners. So it's going to be a mixed bag. I think Indian companies will really need to innovate. Um, the interesting thing is in India itself, we don't hear much about the use of AI by companies as much as in the US. Um, in the US, we definitely seeing a lot of change happening. Companies are really changing the kinds of jobs people are doing. And our IT companies are very focused on the US. And so, to that extent, I think they are changing, innovating, and there could be periods of consolidation. But I think in the end, we will come out strong, in my view.
All right, but Sunita, given the geopolitical situation that we have at play, what is the best strategy that you would advise for our viewers to have? Because I remember back in May when you connected with us, and it was all that India-Pak issue that was going on. You suggested that one should really be on the defensive side. One should have a defensive portfolio, have some cash in the hands as well. But what about now that given that the trade deal could be on, the earning season is approaching, what is the best asset diversification that you would like to suggest?
Well, I still maintain my view that the markets have run ahead of all the risks out there. And it's actually been quite surprising that the markets have ignored all the geopolitical tensions that the world is seeing, but whether it was India, Pakistan, Israel, Iran, there's obviously Russia, Ukraine, and there is a lot of tariff disputes, and the markets seem to have ignored all of this. So I still think that one should remain cautious and also focused on the risks. And in terms of it's great to be diversified. And while right now it seems that small and mid caps have been the place to have been in over the last 12 months, over the last 2 years, 3 years, it's been really like a mid cap, a small cap rally in India, and while in the rest of the world, it's in the US, it's been all technology. So there has to be some diversification from these themes. And I think one should still focus on the companies' inherent growth rates and companies that are insulated from largely from exports or global trends, and focus more on India-specific growth.
Makes sense. Punita, so good having you today on the show. Thanks as always for joining in.
Thank you.